Thanks, Senator Warren. Senator Ossoff is recognized from his office.
Thank you, Mr. Chairman, and thank you to our panel. Congratulations on your nominations. Thank you for your ongoing service. Mr. Grunberg, I'd like to begin with you, please, sir. What do you view to be the most significant threats to U.S. and global financial stability?
It's a pretty large question, Senator. I think the changing environment relating to the conduct of monetary policy and the efforts of the Fed to respond to inflation by raising interest rates, and that's an action that's not limited to the central bank in the United States, but to the central banks in other major jurisdictions of the world. I think the risk there, in effect, of a global tightening to deal with inflationary pressures does also carry the risk of significant consequence for the economies of those countries and risks to the financial systems of those respective jurisdictions. And if you're looking at the potential for financial stability risks, I think that is something that we in this country, and I think on a global basis, are going to have to keep a very close eye on.
Thank you, Mr. Grunberg. But what would be the most concerning potential channels or mechanisms of action by which higher rates, in your view, could threaten financial stability? Which are the markets, the sectors, the assets, the trades that you believe are most vulnerable to unwinding or failing in a higher rate environment at a scale such that there could be contagion to the overall financial system?
Probably 2 points I would make. One, I think the banking system itself in the United States does have significant exposure to interest rate risk. A lot of our banks have made longer-term loans that are now susceptible to rising interest rates, and there's an overhang of unrealized losses on the books of our banks that's very substantial and that could be problematic depending on how the economy evolves. And then outside of the banking system, in the non-bank financial sector, we have a less clear line of sight and the potential for significant leverage accumulating there. And I think that's a matter of attention for us. It's been a focus of priority for the FSOC, the Financial Stability Oversight Council, and the FDIC has been participating in that work along with the other federal financial regulators.
Thank you. Within the commercial banking system, can you please characterize in more detail that overhang, to use your term, to which you referred? Where is the most significant leverage that poses the most significant risk? Who are the borrowers?
Well, it's actually securities that are being held on the balance sheets of our banks, longer-term securities that banks accumulated during the prolonged period of very low interest rates. They accumulated longer-term securities on their balance sheets to try to manage a narrow interest rate environment. But as rates are now rising, those securities actually have a negative value on the balance sheets of the institutions. The most recent quarterly banking profile that the FDIC released, we noted that there's about $470 billion of unrealized losses on the balance sheets of our institutions. We're going to release the QBP tomorrow for this third quarter, and I can tell you now that that number has increased. So that's an overhang. Right now our banks have strong liquidity, so they shouldn't have to dispose of those assets, but as the market evolves and banks may need to dispose of those assets, there are substantial unrealized losses that could impact our institutions.
Thank you. Mr. Grunberg, final question. Chair Powell, Secretary Yellen, Chair Gensler have all expressed varying levels of concern about liquidity in Treasury markets. What's your assessment of the level of risk there, and how might liquidity concerns in Treasury markets translate to issues that could impact depositors and those you're entrusted with protecting? Thank you.
Well, if I may say, in the first instance, on matters such as that, I defer to the Treasury Secretary and the Fed chair.
Mr. Grunberg, you must have a view on whether, as a member of the FSOC and given your current responsibilities, you must have a view on whether liquidity in Treasury markets is a matter of concern for financial stability and for the depositors that you defend. Yes.
No, I think it is an issue. It's been raised by the officials you reference. I think it's been principally so there is an issue there. I think it's principally been driven by the volatility in the financial markets and the economic uncertainty that I think is the impetus for that volatility. And it's an issue for the Fed and the Treasury that I know they're very focused on. I think in terms of the banking industry, Treasury securities are important. The industry holds large amounts of it on their balance sheet, and it goes back to the point I just raised in terms of the possible risks on the balance sheet of our banks from holding those securities with unrealized losses.
Thank you, Mr.
Thanks,
Grunberg.
Senator Ossoff. Senator